Well, good day. Today I'm going to talk to you about the black swan. Have you heard about it? Well, you kind of have. In the investment world, it's an unseen or unpredictable event. Can you think of like the coronavirus? We use technical analysis, which can't predict those things, but it is very, very helpful. As a matter of fact, early in the year, we had a notice to raise cash. So as you came in for your quarterly meetings, one challenge I had with a few clients was that although we're making a lot of money, I had a fair amount in cash, and I had to explain the charts told me to do that. Well, hindsight is 2020. It benefited you greatly because look at the market right now. Our growth strategy is down about half what the market's down. Now remember when you first hired me and what I had to talk about. I wanted to have risk protection. Every stock you own has a floor. As time goes, the floor raises. We also have an algorithm that tells us when to get out of the market. Here's what it means to you. If you've been investing with us for a period of time now, say 3 or 4 years, and we hit all our stops, the market just went horrible, you're going to get out with a net gain. So the money is not made in a daily or monthly basis. Now this coronavirus is a pandemic. I looked at the last 13 pandemics we had, and here's what I found. Initially, at first month, it's a steep drop off. But on those 13 pandemics, going out 6 months, the average return wasn't down, it was up 7%. In fact, only 2 of the 13 had a negative number. So going forward, it's really important to have a clear sight about that, to know how we're getting your money to you. We're not taking money out of stocks right now. We also see some technical analysis right now that shows us the market's way oversold, big time oversold, and in all likelihood, we're going to see some relief here in the relatively near future. Now, we can't predict good or bad. All we can do is control our response to that market. So the market goes really, really bad, we're going to be out of the market. Which brings me to something else. You recall back, I guess it was last spring, I talked about a new strategy I had for bonds. Well, gang, you probably hadn't even seen this. Our bond strategy has made over 7% this year, twice the benchmark. So things got really, really bad. I think there'll be places we can invest in a bad market to make some money. But in the meanwhile, I just wouldn't invest in fear. You know, you're at a bit of a disadvantage because the news agencies understand that the car wreck or the train wreck is going to get more viewers than the Good Samaritan. And here's one thing I want you to consider as I close this out. Notice how the market's related to you. It's up 1,000, it's down 1,000. What does it even mean? The market 15 years ago was a third of what it was today. So think about your money. If I said, hey Bill, you made $1,000 this year, would that be good? It just depends, doesn't it? If you had $1 million invested, that's horrible. But if you had $1,000 invested, you made $1,000. What I'm saying is the market day is higher than ever before. So when you lose a point, it's a smaller percentage loss than it was when the market was a lower note. I really want you to gain from these conversations I have. Let me know if this is beneficial to you, because I plan on doing more of them. Be sure to make the Speakers Bureau. I have a lot more information to share there. Good day.